Howdy, welcome back. In today's Dion Talk, I'm going to cover protecting your portfolio. For me, this is really important because my investment strategy is to invest 100% in rental properties. I don't do stocks. I believe in diversification, but I think diversifying in one asset class is the best choice for me. It might not be for you. You might have stocks, you might have real estate, you might run a business, but with your rental properties, what I'm going to talk about today can apply even if you have other asset classes. Since I invest 100% in rental properties, it was important for me to develop a strategy that was designed to be prepared for a prolonged government shutdown, a pandemic, or a stock market crash. Because those things will happen, and I don't want any money locked away in a retirement account, not paying me anything that I can't use for years and years and years, hoping that I'm going to pay less taxes on it later. I want my money now actively paying me money with cash flow. I want to be gaining appreciation on at least 4 times what I spent because of using leverage in my portfolio. I want to be experiencing principal pay down every month from the tenants. And I want the current tax benefits that come along from owning rental properties. There was a period of time when I maxed out my retirement account contributions. Then I learned all of these benefits and I completely shifted the way that I look at investing. And someday I'm going to make a video on why I actually emptied out my retirement accounts, but not today. So it's extremely important for me to protect my portfolio because if I lose it, I don't really have a backup plan. And at the end of today's video, I'm going to talk about how with my 14 units, I still think that every single one of my tenants is richer than I am. There's really 2 main ways that I diversify my portfolio to protect it. And the first one is to diversify my locations. For me, it's better to have small multifamily or single family houses that are more than 10 miles apart. This way I don't draw from the same sources of tenants. When I'm buying a property, I make sure that it's close to at least 2 economic drivers. So a base, a port, a college, a hospital, a Boeing or an Amazon terminal with a population of at least 100,000. So that if one of the major employers goes away or a BRAC meeting happens, base realignment and closure, and they decide to close down the military installation, I don't completely lose all of my tenants for all of my properties. As an example, while I currently invest locally into the market that I live in, I'm in Washington State. My properties are spread out between Tacoma, Washington and Olympia, Washington. One's out in Spanaway. And I have one of my properties out in a town called Yelm, which is basically where the Apache call the boondocks. This way, there's several different economic drivers to where I'm protected. 10 different things would have to happen for my portfolio to be impacted. I'm actually currently starting to look for properties down in Arizona. I'm going to find another small multifamily and house hack there and basically be paid to snowbird. The second way that I protect my portfolio is by diversifying my tenant base. My portfolio is basically set up to where I have about 1/3 of my tenants are in the military, 1/3 of my tenants are from the Section 8 program, and about 1/3 are either working or are retired. This way, my tenant pool isn't impacted by something like a prolonged government shutdown, or even the pandemic, or really a stock market crash. I'm actually designing my tenant pool around being ready for one of those events. And you have to be really careful to avoid discrimination. I wouldn't run an ad that said, rental property available, only military may apply. Rental property available, only Section 8 vouchers accepted. But you can control how you advertise. So when I have a unit opening up and I would like to market it to a Section 8 tenant, I call the housing authority. I make sure that they know about it. I make sure that they have a copy of the link just in case they've got a tenant that is looking for that number of bedroom place to open up. If I have a place opening up and I am ready to put another service member in it to keep my 1/3 ratio, I will advertise on the base first. That way I'm not strictly saying military only, but they're the ones who see the advertisement. And each base is a little different. To find out the agency that handles the advertising of housing on your military installation that's close to your rentals, I would reach out to MWR, Morale, Welfare, Recreation, on each base. They might not be the one that handles advertising places that are available, but they will be the ones who would know who on that base to direct you to. At least that's how I've had my best luck. When screening for tenants, whether they're military, Section 8, or not, I always screen with the exact same criteria. I've seen a lot of people talk about 2 or 3 times the income for the amount of rent, but that's never really mattered to me. I know people making 6 figures that are late on every bill. What matters to me is no evictions ever. I don't care if it was 20 years ago. Somebody who's learned that they can live in a house for free for a certain number of months has learned the system, and I don't want that person in one of my units. Second is I require a credit score of 700 or higher. A lot of the landlords that I know that I interact with pick the number 650 or higher, but I've had a waiting list of people waiting for a property to open. So going up to 700, I've still been able to maintain that list, even with Section 8 tenants and military tenants. A lot of people think of Section 8 as low-income housing, and that's really not what it is. Low-income housing is designed for somebody who makes low income or has a low income. Section 8 is for somebody on fixed income. So think of somebody with disability or children with special needs or retired veteran on disability. I have a Section 8 tenant that has an 830 credit score. And with those criteria, credit score and no evictions, after my first 2 nightmare tenants, I've never actually had a later missing payment. So those are the ways that I protect my portfolio. I make sure that my locations are spread out, and then I have multiple sources of tenants. I make sure that my tenants come from different sectors so that if something impacts a sector, it doesn't impact all of my tenants. I also make sure that I'm not over leveraged. I want to maintain 70% or less leverage so that I have at least 30% in equity. Originally, I was going to have 4 mortgages. When I got to 4, I would pay 1 off and then save up and buy another place and add a mortgage and just stay at 4. That way I was benefiting from leverage, but I wasn't over leveraged. And then interest rates dropped from 6% down to 3%, and it makes more sense to go all the way up to 10 mortgages. So I'm going to do that as long as I can maintain 30% equity. At the beginning of today's video, I talked about how I was going to explain how I still see all of my tenants as being richer than I am. When I was a kid, I never thought of our family as homeless. We lived in Los Angeles. We always had a house. We just didn't own it, and we didn't pay rent. My family would move into a house, fix the doors and windows, and wait for the owners to show up and say, "Who the heck are you guys?" And whenever the owners would show up, we would move to the next house. My parents tried to educate me that in their opinion, we weren't squatters, because a squatter trashes a property and then stays and forces an owner to go through an eviction and cost them a bunch of money. In my parents' mind, when we moved out, the house was in better shape than when we moved in. And we never cost the owners money because as soon as they found us, we left. There was even a time I remember, and this was in the 70s, rents in Los Angeles were close to $1,000. An owner offered my dad to stay in the property for $50 a month because the owner was happy that somebody was living there. That way somebody wouldn't break in and steal things. And my dad said, "Nope, we don't pay rent," so we moved. I remember as a kid going to friends' houses, what we call today play dates, but I would go hang out with my friends. And it was my little 6-year-old brain trying to figure out how the world works. And I would listen to their parents talk, and every now and then the subject of rent would come up. And it confused me. I mean, first of all, how much rent was. That just seemed like a huge number. Second, this happened every month. And third, somehow I found myself in the house of some people who were so astronomically rich that they could afford to pay rent. I had no idea how that happened. And so as I grew up and I learned a little bit about how money works, one of the things that contributed to me going into the Marine Corps was that they provided housing. When I got out of the Marines, I was homeless for a while. I lived in me and my son lived in a bus behind my brother's house that was kind of converted to a living situation. And now you flash forward to currently, I'm house hacking one of the units in my fourplex and I'm being paid to live here. But in my mind, in all of my 14 units, every single tenant is still, it still sticks with me today that they are richer than I am because every month they find a way to pay rent. Might not be the way the world really works, but it's still the way I see it. And I'm not sure that that will ever go away. If you got anything from this video, if you thought it had any value at all, please hit like, hit subscribe if you haven't already. Share this video with a friend or in one of the groups that you're in, and hopefully somebody can learn from this. Until the next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.